Good morning, everybody. It's Thursday, February the 15th, and we're going to do a little update here to see what's going on in the markets. Of course, we're starting with the S&P 500 here. I've got it pulled up already on the screen here for you. And as you can see, and I'll go ahead and get my tools out here. So as you can see, we have staged a nice little rally off this 200-day moving average. We bought in at 25.39, and now we're up to about 2,700, 26.99. So we're looking at about a 6.3, 6.4% gain now. And as we had mentioned before, we were kind of looking at some of these zones here, the 382, the 618, as levels of resistance that we would like to sell at, or at least start thinning out some positions. So we also talked about this 50% retracement because it coincided with this 382 from this other move. So we kind of thought that this might be a little zone here that was also reinforced by the 50-day moving average at 27.22. And we have actually got today, I think, within a couple points of that. And I'll just pull that up here for you real quick. So we're at 2,700 right now. Today's high so far has been 27.18, so we've been within 3 points of that. But we have pretty much sold off all morning so far. So we can take a look a little bit shorter term here. We were kind of mentioning that we saw that this moving average cross, so that kind of gave us a buy signal, but we were looking for this high right here to be taken out. And so far, that has not been the case. It has remained intact, and it looks like we have now set a lower high, at least for the time being. So I don't know that, we just don't know. We don't know if this is going to be the high in this swing or if this is getting ready to bounce back up again. So we just got to kind of take it as we get it. So one of the things I would like to do here is kind of drive in a little bit closer, and we'll kind of take a look here. And I mentioned yesterday we had the moving averages were in a buy mode. On this shorter term chart, we were signaled to buy because we had the cross. We took out the swing high, this one right here, with this guy. And so we were cued to buy this pullback, which we did, and put on a call spread, and we actually sold that out yesterday for a nice little 20-something% gain. I noticed this morning that we didn't have any strong volume to start out with the day and stuff, so we opened a little bit higher on the day, and that's why we've kind of trickled off, because there's really been nobody there buying. So that kind of makes me feel like that we will probably be starting to turn back around and go the other way now. I wanted again to give you another idea here that I have run across, and we'll kind of update first some trades that we had made. One that I'm looking at right now is yesterday I told you to short Fossil, and so far that has worked out perfectly well. And actually I bought a put spread on for March expiration, but then at the end of the day, because shares rallied higher, I jumped in there and bought some flat out puts that expire tomorrow. So I put my put spread on right in here, but then in the day, or in the moments after that, or a couple hours later, they decided to pop back higher again. So when we were up here above 17.5, I bought some 17 puts that expire tomorrow. Those right now are up 82%. Just a little bit ago, we were up 140%. So I think that this is still going to trickle lower as the day goes on. So I'm going to let those ride till the end of the day probably. I do have the order ticket ready to go just in case, but like I say, I think that that's going to be perfectly fine. So I'm happy with my 82% gain overnight. But like I say, I'd like to get it back up there to where it was at. So just got to be careful with that kind of mentality, because if if the market is shifting here, or if we're actually going to go higher, then I don't want to let a 80% gain turn into a 0% gain. So like I say, right now the tape says to sell. We had the moving averages cross this morning because the gap lower. So we had the cross there. We had this high, or this low, taken out. So that's a pretty good sign. We have not taken out this low, which I think we eventually will, and that's why I kind of expect this thing to kind of pull on back this ways. But like I say, I have some March puts in place too, so that I can go ahead and let these go and still be short the name. I also talked about Pandora. I told you to buy it, and if you have bought Pandora, you are looking pretty good. I don't know how much. Let's see, we're up another 3.3% today. So, we looked in here and we bought, I think we were around 460 whenever we had the queue here, and I'll pull up the tape here to take a look at it. So let's get a little bit closer here just so we can see it a little bit better. We can kind of walk back through what we had. So we had been looking for we noticed that we had a swing right here that we were kind of watching, and we had the moving averages cross. Let me change that so you can see it a little bit better there. I hate that purple against the black background. It's hard to see. So I'll just stick that like that. So we had talked about that, when you see this moving average cross and you saw this high get taken out over here, then you should start expecting a pullback, and we would look for a pullback to the 618 retracement, which is exactly what we got. There's the 618 right here. So we got a pullback to the 618 retracement, and now we're looking for it to continue higher. And like I say, so far we've been dead on the money. So we bought, and I think it was at 460 that we got our Q. It was 459, I think, was the actual technical number. So at 460 right here, now we're up to 507. And if you need the math for that real quick, then I'll be more than happy to give it to you, just so you can kind of see an idea. So we're at 507, and we bought it 460. So we're up 47 cents, which translates to a 10.2% gain. So that's not bad for 1, 2, 3, 4 days. I don't know how much better I can give it to you than that. Let's take a look at another one that I mentioned to you. And I'm also going to give you one that I like going forward here. Now, we had talked about shares of General Electric, and we just kind of had mentioned that it was getting to a point now. This is a daily chart. Let me zoom it back out for you so you can see how brutal it's been. But this is a daily chart of General Electric. GE is the ticker. We have just continued to go lower and lower and lower and lower. So I don't know, there's a lot of reasons as to why you're seeing some of this big selling volume down here. They have, they had to cut their dividend, and management has not done a great job at being, sharp and quick on their feet. So they've kind of lost some business, and they're trying to get things turned around. Let's just say that. So in this year's time, shares have gotten chopped in half, going from 30 bucks up here down to now 15. So you're sitting underwater by 50% basically. But we noticed and I'll pull it up here. I noticed on the weekly chart, we're starting to get a little bit of a capitulation here, and I'll get rid of those Fibonacci numbers there. So this is kind of one of those things where, and I'll pull out here to 10 years so we can see it bigger picture. This was a retracement that we found from this weekly chart here that went, and we'll put it right there. This was the 618 retracement of this move here. So, we were looking to buy on the dip to that, and being on a weekly chart, that was pretty encouraging. So now we have started looking at buying, and I mentioned you should scale in incrementally, not just go buying everything at one time. So I think that this level, as you can see, has been significant before. It was resistance in this area, and it bounced around and around, and then it finally got above it, and then it pulled back to it. So then we also have one over here again where it's been a factor. So like I say, the market has respected these levels, and you can kind of see it all over the place here, here and here, and so forth and so on. So like I say, this is a good set of retracements to be watching. I think that, like I say, if you kind of look at this low here and we just draw a line across through there, we're pretty much sitting right at it right now. So, do we take out these lows over here? Possibly. I'm just not, I don't think so. So that's why I'm buying, and I actually bought in the money calls for July expiration, just so I can kind of get a good delta there, good correlation to the actual stock price movement, and not be so worried about time value getting shaved off. So I think you can stick with General Electric. You're up now a little bit, and I'll have to look a little bit shorter term to see where we got that signal at. Yeah, so we, I think, actually started buying whenever we just went down to that Fibonacci number, which was at what? 16, 18. So I think that was a buy right here, right now, and I think that I'll have to go back and look at the date, and I'll put that together for a little bit later this afternoon, but that was over in this area over here. So you're looking at a few pennies, I think, on the upside, but nothing major, but this is a longer term play, just like shares are forward here. So let me pull it forward. Oops. We'll take a look here, and as you can remember, we were talking about buying, in this 10 1/4 range, because we had saw this dip and we thought this would be a good opportunity. We were given a chance, and so we bought it. And now we are up here at about 10.67, so we're up about 50 cents. This is not one we're playing for the short term. From a short term perspective, we're actually playing this one for a longer term because it pays a nice dividend and it's cheap. So that's kind of where we're at with Ford right now. We had some upside targets we put in there. 11.5 bucks basically is what we're looking for, which would kind of coincide with that 200-day moving average. So that's kind of where I'm expecting this thing to go in the shorter term. Longer term, I think we end up returning back to those highs. So I kind of like the way that this thing looks, and this is a level like right here that I'd marked a little while back. That's kind of been significant right here at the 10 bucks round number area. So I think you can stay with Ford, and if you're not in it already, it's giving you plenty of time to buy it, so you can still buy it right here, right now. Let's take a look at Pandora. It was one that I had mentioned yesterday, and we bought it as well. Oh, no, sorry, we've already talked about Pandora. What was that other one there? Westport, there we go, sorry. So Westport, we had bought based on this hourly chart because we're looking for a trade here, and we talked about the moving averages get the crossover here. We had taken out the swing high, and so this one was giving us a chart. We bought in here, I think at 294. We were talking about 296 or 294 to 290, somewhere in that area. So a little less than $3. We have now gone back up above $3 this morning. We actually touched 320. So I think that this one's one you can stay with. And like I want to be sure to reiterate that this is a speculative stock, and this is, I think it's going to do pretty well, and I think it's got a good chance to make some money going out in time. But also, I should just note that, you don't want to let this thing just be, you want to keep a tight leash on it, and you want to keep an eye on it at all times, because, it's one of those that can go south on us, and if it does, then we don't want it to sit there and hold on for no reason. So, we have the 200-day moving average sloping up to us here at 263 right now. We have this swing low at 271. So, it's kind of checked it already right there, and we put in an incrementally higher low, so that's an encouraging sign. And we remained above this low over here, so that's also an encouraging sign. So I think this thing is going to continue higher. We ran into that 50-day pretty much this morning, and we're within a few pennies of it, so we met some resistance. So I wouldn't be surprised to see the shares kind of dabble around here for a second before they get some legs to go back on up. But like I say, that's just, we'll have to give that one time, but keep a tight leash on it. As far as setting a stop loss, I would probably use this low over here. That gives it a little bit of room to touch that 200-day if it needs to, or just give it a round one at, say, like 250 or something like that. So that's kind of how you want to play Westport. The other one that we jumped into, and I'll have to go over here to my chart and kind of take a look at it real quick. Where's it at? Oh yeah, the VIX, the volatility index. So, little notifications are ridiculous. So the VIX today, and we'll just go ahead and take a look at the actual VIX itself. So we're up about 3% right now in the morning, but we're still underneath that 20 level. It did open lower today, so that's it's a good sign that we were able to, stay opening. And as we know, these little bars here, the tick on the left represents the opening price. The bottom of the bar represents the low of the day. The top of the bar is the high of the day, and this tick on the right will represent the closing price. Since the markets are open, it represents the current price. So just kind of keep that in mind. But if you look at any of these other candles over here, like say this one right here, you see that you opened, you had the low, you had the high, and then we closed right there where that tick sticks out. So that's kind of how you interpret these bars on this OHLC chart. Okay, so the VIX, like I say, it's slightly up at the moment, but I think that you can kind of, I bought some VIX calls for longer dated. I think we're looking out to March, just as an insurance hedge against a net long portfolio. I am thinning the portfolio out and stuff and taking profits off the table, but the volatility seems to be giving us a sign here. We've got a lower low in place over here. We've got a lower high in place. So I think in the averages are showing us to sell. So while we might bounce back up here a little bit, I think that this is looking like it wants to subside. The caveat there being that is if the S&P just kind of comes apart and we start like dipping down below that 200-day moving average, then we will have to be a little bit more cautious. I wanted to give you a little setup here that I saw, and let me get it pulled up here because and I'll just flip over here to a daily chart, and it's shares of Applied Materials. They reported earnings this morning. I thought about buying going into it, and I'm glad I didn't because it would have not worked out in my favor. I would have been buying I would have been betting on a lot bigger move out of the stock this morning, which it did not do. So I think, though, that after looking through this report, and I've actually got it pulled up here for us, and I just kind of did a recap here. So this is on Fidelity here. Pretty much that they reported yesterday after the close. Let's see here. Net income. Okay, so net income was 135 versus 703 last year. But that also included the tax charge. So they changed the tax code there in the federal government. So a lot of these companies, and you're seeing that very consistently across companies, taking a hit this time to go ahead and get their money repatriated from across seas. So if you kind of look at this one on the adjusted basis, now I have to always reiterate that adjusted you need to take with a grain of salt, but that's what the markets are looking at. So they had delivered $1.06 versus an estimate of 103. So they beat by 3 cents there. And revenues, let's see here. They had, so they had, the analysts had been looking for 4.11 billion in revenue, and the company delivered 4.2 billion. So that's a good beat, and it's also more importantly anyways, versus last year, sales are up 900 million, or pretty much up 30% or 28% or something like that. That's good. I mean, if you're growing revenue at 30% clip year over year, your earnings are growing solid too. I think that this is one, and I've actually pulled that up here. If you take a look at their history of earnings, again, the gray bars represent the estimate, and the blue bars represent the actual, or represent the adjusted actual numbers. They have beat on every single one of these quarters that are listed here. And if you take a look down here at the price to earnings ratios and stuff like that, you know, right now it is trading at a less than a 20 PE ratio. Versus its historical average of a 30, and it is trading below the market average of a 30, 30, and also below the IT section or sector altogether. So, and it's pretty much in line to slightly lower than the S&P. So I think that that this is a good looking one. And they actually, the other reason that I like this one, they doubled their dividend today. So starting the next dividend payment, they will be paying, this will be the last one at 10 cents, and the next one will be at 20 cents a share. So that's a 100% increase in the dividend. As you see down here, the payout ratio is still pretty low, and the payout ratio is simply how much of their income they're paying back in dividends. The growth in dividends has not really been there. So this will be, this dividend that this doubling today we got was a nice, you know, turnaround from this over here. So, this dividend's now right at about 0.8%. This is going to go to about a 1.6, 1.5%. So I think you can buy that one. And for a long-term play as well, I think that it looks pretty good for longer-term playing. I mean, it is elevated, so keep that in mind. But even at this elevated level, it is still relatively cheap. So I don't think that the markets are going to crush it or anything on the downside. I'll put some work together, and we'll take a look at it a little bit here later. But just roughly speaking, we can take a look at this larger swing here and see what it looks like in case it does kind of fall down. Now, we are finding some support here at this round $50 number, which, like I say, coincided with the 200-day moving average, 49 bucks. So, you know, this is in a good spot, I think, to buy it, and so I want to be buying it, and I am. I'm actually putting together some option trades right now for it, so I'll fill you in what I end up doing. But for any, for pretty much all intents and purposes, I think this is one you can buy. Now, if you want to wait for a dip back below 50, I think you'll eventually get it. But, you know, for a longer term play, like I say, you're just, this is a good one. Then whether or not you pay 49 bucks or you pay 50 bucks for it, I think either one of those is a fair price for this name. So, be looking to buy shares of Applied Materials. AMAT is the ticker. Like I say, I'll put together a little bit more work for you a little bit later on. Okay, guys, I'm going to go ahead and clock out here for the time being, and I will be back with y'all in a little bit and let you know what's going on and what I see. All right, see you later. Bye-bye.